Welcome to the Trading Lounge and the day ahead report, and here we're looking at the US 30 on a 30-minute chart, and we can see that we've had our correction at the 13,500 and is moving to the upside. The 13,600, the Dow Jones likes to normally work to every 100 points, so it's a really good trading strategy to trade to every 100 points and use the sub levels in between all of that. However, one of the other numbers up here that's a bit of a strange number, but it's 65 and it's 13,650, and it just seems to sort of carry a fair bit of weight in the market, so we can kind of expect that to play out there. And the little structure that we're, first of all, that 1365 is a bit of an old high as well, so you can see here from these highs here, which is around the 13,650 there, so that's going to play out in that little area there. But as I've mentioned before too, and also showing this chart, that we are approaching this old high here, so and that will be across the, most of the markets. Well, some are leading and some are lagging, so to speak, but they're all in one way or another facing supply old highs as such. So in this move up through here, it's a really nice little impulse wave. We've got a little 5-wave structure within here, so this would be little wave 1 here, and all of this is wave 3 here, so we've still got 4 and 5 to play out through here, so we can still expect further upward movement there. I've taken the start of the structure from here because this made a new high through here, so we've got to look at this as being sort of an A and a B and a C here, but it may not be the case. We may be able to get a further wave 1 out of here and a wave 2 out of here, and then there's all of this being a wave 3 and a 4 and a 5. One of the things that we've got to be sort of mindful of is this is the S&P 500 here. I sort of like to really use the S&P 500 because it's a broader index than the Dow Jones, and the Dow Jones is not even the top 30 companies anymore, so to speak. So, but what I wanted to point out here is the 1500. So the 1500 is old highs as well. So it's really going to be a sort of a stopping point, a really strong resistance. It's a medium level, and if we have a look on the daily chart, we can see here, going back over history here, that it stopped it twice before. WD Gann would say that a double top is never the end of a bull campaign. I think that's his sort of exact words. So we can expect a further high here. Of course, you can get triple tops, and Gann would also say too, if you got triple tops, then it would be the 4th time that it would pop through the top there, if that was going to be the case. But in one way or another, it will move higher there. But just pointing out that 1500 here, and also on our local market as well, we've got just cross it over to that, we've got the 4800 here as well. So the 4800 well, the number 8 to me is a profit-taking number, and we should see some type of correction here. Now, what will happen here? There's not a lot that can really sort of happen at a level. There will be. Let's just have a look through here, see if I can use this thing here. So the market can do a couple of things. It can either just move straight up through it and then come back down and correct across it here as such, or we could be looking at where are we here? The market moving straight up to here and basically just reacting here. Wrong thing here, don't use this very much, but hitting the 8 here and coming back here and having some type of 3-wave correction here, and then having a 5-wave structure to the upside, so to speak, and then having its larger correction. So it's going to be one or the other, but the main point is to understand that there will be some type of correction here. And when we look back in history at this market here, just bring it up through here. This is the this is the structure here. There we go. We can see that, of course, the 5,000 is a strong resistance there, and the reason that the 8 is a profit-taking number is because it's really the first even number before you get to the next whole number. You know, and it could be $28 facing $30, or 18 cents facing 20 cents, or, you know, it's just the first even number before the next whole number, and it just seems to be the logical profit-taking number. So if you pay sort of close attention here, you can see it here, and it's just something that we can expect when we get here. This structure that's been moving up through here should be able to be counted in 5 waves, and the extension's in the 3rd wave, but this would be the 3rd, the 4th, and the 5th through to here. So that's what we'll be looking at through here. So we're also counting 5 waves from the 4,700 here coming up through here. And if we have a look at a smaller chart, let's just see if I can have a look at a smaller chart here. Okay, here's a 25-minute chart here, and if we just sort of follow this through for a moment, just get I can see we've got a 5-wave structure in there, so that's the 1, the 2, the 3, the ABC for the 4th here, probably the 5th here, and then, so we've got 5 waves to here. So wave 1, wave 2, wave 3, wave 4, and wave 5 moving up through here. It can be counted like that, or it can be counted, let me just have a closer look in here just to see what's going on in here a little bit. Oh no, it can go further up. It can continue to climb. It's still unfolding. Now, if it just moves through the 4,800 here, then the group 1 here, the 10, 20, and 30 will slow it down. So yeah, so we've got 1, 2, 4, 5. There'll be some sort of reaction through here, but do expect the idea really is to trade to the 4,800 and get out through there. Alrighty, let's have a look at the base metals and the precious metals, as they're in positive territory as well. Okay, looking at copper here, which is a good driver for the Australian dollar and also the materials sector as well. And we were looking at the 360 here as becoming support. It was the 61.8 retracement level, and what we're looking at here is we've got 3 waves down here, so it is corrective at this stage here, but the group 2 area here, the 365, 72, and the 80, the price really needs to get back into the 365 as support. Yes, it is trading above the 65, but that's just not enough. It has to the breakout through it is important, but the retest is more important. If it can hold there as support, then this will be 3 waves here, and moving up here a little bit further would offer would confirm this as a 3-wave structure, not as a 5-wave structure developing to the downside, and then would see new highs made here. But that's not confirmed just yet. So, but it is step 1. And as we've been looking at, say, BHP here for the US here, it's reacted at 80, a profit-taking number. So we were looking at 5 waves down. We're looking at a 3-wave rally here. So that copper moving up there as expected on the 360 will help place that low into the market there. And so everything's sort of on track in a way. So we'll just continue to watch that develop. And obviously many other stocks in the materials sector are the same as this situation as well. Right, the other sort of factor with this was the dollar, just while we're here. Now, what we were looking for the dollar was, as you know, we were looking for a retest of 80 once again, and in terms of an A and a B and a C, and that's played out quite nicely through here, and we should see this move further to the downside. It does concern me a little bit that that should be the top of the C wave there, but we've got this 3-wave structure here, and I'm wondering if we're going to get a larger correction, because the corrections when using Elliott are the weakest link, and corrections can be in terms of price coming up or down, or they can be sideways, and sometimes they tend to go sideways a bit, and a bit of price as well. They seem to just sort of go through time and space waiting for other things to fall into place. I'm not sure how it all sort of works, but they can double in size. So this A, B and C here may end up just being the A wave, and then we have a B wave here and a C wave. Basically a bigger version of this here can unfold here. So what we're looking for here is we really need the 79.72 to be the resistance, which it's below that now, which is good. But the next step would be the 79.50 here. If that became the resistance, that's the midpoint, and that's important because it's the halfway point between the 79 and the 80. So the balance of that would be to the downside. So that 79.50 there would be quite critical and would really send it continuing to the downside. So, but we'll talk about this a little bit later. But obviously, this is going to have impact on the material sector as such. So yeah, now the oil market has pretty much done what we sort of expected it to do. We were tracking this. We understood that we had a corrective pattern from this high here because we had 3 waves in here, and we just needed it to play out through here, and it found support on top of minor group 1, 2 and 3 here, and now it's pushing to the upside. And as you can see, it's pushing to the upside. You can start to count the waves to the upside. So we can see wave 1 up to here, wave 2 back, wave 3 is moving up through here. So we'll see a 4 and a 5, and then we'll see a larger correction across the 95 here, as 5 is the second strongest number. So yeah, so that's sort of positive. And also oil will follow stock, and it is following stock. Everything is following stock at the moment. So when we look at the gold market as well, it's pushing up. It didn't have a clean account as wave count as silver's done, but it's still there. We did have this wave 4 over here, and that's the problems with corrections that I've just mentioned. They can get a bit weird on you and double in size and so forth. And even the wave 4 here does overlap wave 1, but we've got to give it some space when you're working with leverage investments, because when Elliott did his is famous for his 5-wave structure, the impulse wave. When he did that, he was using the Dow transports and the industrials, so they weren't leveraged products. So you tend to get over out of the 3. There's only 3 rules in Elliott, and one of them is that wave 4 cannot overlap wave 1, but it is the weakest rule when it comes to leverage investments. So, but we still have our little 5-wave structure to the upside, and we were looking at 1690 as a target, and that's fallen into place now. So a keen eye should be able to count the 5-wave structure up through there. So expect a corrective pattern across the 1690 there, and silver's pretty much the same as well. We're looking for support on top of the 3100 and moving to the 3200 here. So the count is a little cleaner on this market. Yeah, expect a correction at that point there. Alrighty, let's have a look at FX. Just want to go over the US dollar in a bit more detail here. That so we've got this little A, B and C wave here, and that can be the end of it, and we're looking for this to fail here and fold down through here. So taking out this trend line, and the 79.50 it would sort of confirm that price action. Being under the 79.72, or even the fact of just dropping out of the group 2 here, would certainly help the downside for this as well. But I've just placed this here just in case. So this little A, B and C here to make up a larger A wave, a possible A, B and C here for the B wave, and then that would leave us 5 waves to the upside there. So that would, if that was going to unfold there, that would be the 1, the 2, 2 to there, 3, 4 and a 5 here, because a C, an A and a B and a C wave is always in 5 waves, and the C wave should have some sort of relationship with the A wave here in terms of size and time and so forth. So we could get that larger pattern there. So just once that's completed, then we would see the further downside there. So just pointing that out as a possible thing, because when you're using Elliott, you really need to have all the counts on the table and then eliminate them one by one as they break down. And dropping out of group 2 there would certainly help that. But as it stands, we're on track. I just need to put that on the table there. So the reverse of this would be on the euro would be looking at this as we were looking at this as wave 4 the other day. So we're looking as moving up and coming back to the 4th wave of 1 lesser degree, 38.2 retracement level and all that sort of stuff. And then we're looking for a move up, and it is unfolding to the upside quite nicely. So from this low here, we'll be looking at this in terms of up for 1 here, an A and a B and a C for wave 2, and this will all be the 3rd wave to the upside here. So we're still expecting to go higher. We'd be taking out the high at the 134 there. This is not such a significant number. This is more significant here because the 133 here is the top of group 1. So 131, 132 and 133 is the top of group 1. So finding support on this really starts to put the target at 135. But the 34 is a Fibonacci number, and as you know, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, and so on. You know, we normally work to the largest number. So, you know, like 13, 21 would work with 20 in that case, and 34 would normally work with group 1 or the 130, and then 55 would work with the 50 rather than the 55. But these numbers do come in; they're part of the part of the geometry of the markets, and they will play out. So we do need to keep an eye on this 134 here as such. So this can be you know, the sort of the arrival, the reaction, the first high above the level, and then a larger correction across here. So it's something that we'll be paying close attention to, and I did mention it when we were coming up here, and we need to mention it again to play out, because even 5 waves up here would, once it's complete, would see some type of corrective pattern across here as well. So we need to, in this particular case, use the 34 as a stronger landing support for the general larger market as it approaches. So anyway, we'll keep an eye on that. The Australian dollar and the S&P 500 and copper tend to have relationships. Well, the copper market probably about 80%. But what we were looking for here, the thing is with with all of this market, the wave count is not. In some degrees we understand where it is in the bigger picture, but on smaller degrees we're not quite sure about it. So that means we need to use the levels, and what we do have here and what we were waiting for, we could see that had the breakout up here, which is important, but as I mentioned, the retest is more important, and we've got this retest here in 3 waves. It looked like we had a little sort of triangle pattern in here, 5-wave structure. So we've basically got an A and a B and a C wave in through here, and it's also the retest into 105 is what I was basically looking for. So that's in play there. So now the market's, as the market's moving back up through here, this big block here is going to be the supply, the resistance, of course, and would be working once again back with the midpoint, the 105.50. So any long trades would require that number there as support, and followed by the group 2 here, and especially the 105, the 72 there. Once they once you've got support in there, then it chips away at the supply here, and the demand becomes stronger than the supply, and we'll move through there. So it's something to look out for there. I'm just wondering if we've got. This is just a 5-minute chart here. I'm just looking at the structure. It does appear that we've got wave 1 here, wave 2 here, and then this is all of the 3rd wave here. So in the 3rd wave we've got 1 and 2 here, the 3rd, the 4th, and the 5th is coming up through here. So That means that got the 1, the 2, the 3. So we should see a wave 4 across here, right? Then a wave 5 up into this area through here, but the top of the wave 5 will be here. So once we get here, we'll hit supply over there, and then we'll get a 3-wave price action from that. So we'll get a wave 4 here, then a little sort of wave 5 up into here, which will be the top of that whole structure there, and then we'll have some sort of ABC pattern here. So that would be the one to look for there, and then we would see the market push up from that point there, if it's going to follow the S&P 500 up to the to the 1500. So look for something like that there. A little bit tricky to navigate, but unfortunately that's just the way the cookie crumbles. So alrighty, well that's it. So good morning, good luck, and enjoy the day ahead.